Hi dear traders, you're watching a recap of the Asian trade on April 6th with me, Maria Stardup. Wall Street closed with mixed dynamics yesterday, so did stock markets in the Asian Pacific region. Markets in Australia and Japan opened in the red on Thursday, but New Zealand's markets opened with a minus 0.2% growth. Market participants are poised to avoid risky assets for the obvious reason, a recession threat amid the hawkish rhetoric of major central banks. Until lately, the top global economy has withstood the rising interest rates of the Federal Reserve. However, the US economy cannot take a punch anymore. Yesterday, the ADP employment report revealed that hiring in the US private sector cooled down considerably. US private businesses added 145,000 jobs in March, following an increase of 216,000 a month ago. Besides, the US services sector contracted in March at the fastest pace in the last 3 months. On top of that, headline inflation eased to the lowest level since September 2020. Now the markets are anticipating the US non-farm payrolls, which are due tomorrow. If the key report on the US labor market logs less robust employment, the recession threat will become more realistic. Cleveland Fed President Loretta Mester agitated investors with her remarks the other day. She advocated for the overall rate increase to more than 5% this year. From her viewpoint, high interest rates should be put on hold for a while. At the same time, market participants share hopes for a dovish revision of the Fed's rhetoric. FEDWATCH tool indicates a 57% chance that the Fed will decide to take a break in rate hikes at the meeting in May. The recession threat is putting a strain not only to risky assets. A looming recession is also a bad omen to the US dollar. A recession will push the greenback into selling pressure, thus eroding its value. However, the US dollar managed to find a catalyst for its recovery. Recently, bad macroeconomic news was welcomed by the stock market. Yields of US Treasuries have been falling on the back of poor metrics on the US economy. In turn, the US dollar has been losing ground. Remarkably, yields of Treasuries fell overnight, but the US dollar went up on the contrary. The US dollar found some support from the hawkish comments by the Fed's policymakers. The US dollar's index tried to settle above 102 in anticipation of the non-farm payrolls, but without any success. The index slipped to 1.9 during the Asian trade. Despite the rally in the North American session, the US dollar index is trapped in the downward channel. It traded within the corridor between 101.8 and 102.1 in the Asian session. Now the instrument is below simple moving averages of all periods. This disposition could signal a further fall in the US currency. This defiant price action of the US dollar could also indicate profound changes in market responses. The principle poor economic data means good news will benefit safe haven currencies. This principle accounts for the current behavior of the Japanese yen. It was the only currency from the basket of 6 major currencies which outplaced the greenback last session. The dollar-yen pair traded in a corridor between 130.8 and 131.5, with high volatility in the Asian session. The pair was fighting with the dollar bulls. To ensure a confident decline, the dollar-yen pair should settle below 130.9. The yen is commonly viewed by traders as the best in time of economic woes and the worst in the time of an economic boom. Now the yen has come under the spotlight. The dollar-yen pair is consolidating at around 131.3 and is ready to reverse downward following a rise last week. Moreover, the yen received some support because the differential between policy settings of the US and Japan's central banks is getting milder. The Federal Reserve is widely expected to announce a pause in rate hikes. However, the new Bank of Japan's governor could surprise markets with hawkish decisions because the time is ripe to cancel the stimulus program worth $11.7 trillion. During their 10 years of Haruki Kuroda's service, the central bank injected such enormous liquidity into the market. Apart from the recession threat brewing up in the US, the Asian region is sensitive to escalating geopolitical concerns about a standoff between China and the US, as well as North Korea and the US. Beijing states its discontent with the talks between US House Speaker Kevin McCarthy and Taiwan's presidents. Today, North Korea accused the US and South Korea of escalating tensions to the brink of nuclear war through their joint military drills and promised to retaliate with offensive action. All these events influence market sentiment and support the yen as a safe haven asset. Australia is also not immune to global financial and geopolitical turmoil. Importantly, Australian banks are well capitalized, profitable and highly liquid. The Reserve Bank of Australia stated in its semi-annual financial stability review. In early April, the Australian regulator made a pause in the cycle of rate hikes and took a wait-and-see approach. Still, it's premature to predict that the central bank will cancel its hawkish monetary policy. If inflation stays too high, central banks will keep tightening, the report warns. Nevertheless, such forward-looking hawkish comments were not helpful for the Australian dollar. It weakened to 0.6702 against the US dollar in the Asian session. On early Thursday, the Aussie perked up in the light of optimistic China's services PMI by Caixin. After a brief growth, the bears entered the market again and pushed the Australian dollar to 0.6690. After losses, the Aussie tried to recover but failed. Now it is licking its wounds in the intraday corridor between 0.6687 and 0.6728, awaiting fresh economic data from the US. The New Zealand dollar is also trading lower for the same reasons. It was in the grips of the bears on early Thursday, trading in the intraday corridor between 0.6279 and 0.6326. The Kiwi was hurt even worse than the Aussie dollar. Soaring inflation, the aftermath of the severe hurricane, and the ailing domestic economy do not allow the Kiwi to spread its wings. The New Zealand American dollar pair extended its slide in the Asian session and fell to 0.6285. Let me remind you that a trader can benefit even from erratic market moves. The key is to recognize the right market entry point. Keep close tabs on financial markets on InstaForex TV channel and trade with profits. Stay tuned.